Hi, Level Up. This is Chelsea, and for this video, let us talk about the topic that I find it quite challenging at first, the deduction and depreciation options. Our topics for this video will be the following: Section 179 deductions and bonus depreciation. So to start, let's say we have a client has a cafe, and fortunately, her coffee is loved by the community, and so the demand increases. She decided to buy a new coffee machine to increase the efficiency in providing their coffee services. She purchased a coffee machine that cost around $12,000. We know that coffee machines and other kitchen equipments are capitalized for 7 years. However, since the client's profit significantly increased, she doesn't want to capitalize the coffee machine and would prefer higher deductions. So good thing we have Section 179. Section 179 deductions gives our clients instant tax boost. It lets businesses deduct the full purchase price of qualifying business property in the year it is placed in services rather than depreciating it over time. So why should we know about this? Simple, immediate tax savings. So the items that qualify for the Section 179 deductions are those items that are new or are already used, as long as it is new to you or to the business, and it should be used by the business by more than 50%. So these items can be equipment, vehicles, furniture and fixtures, off-the-shelf software, or non-residential improvements. Additionally, the business must show profit. The Section 179 cannot be taken to create or increase a loss. If the business can't fully deduct their Section 179 expense in the current year due to the losses, they can carry the excess forward indefinitely and use it in future years when it has sufficient taxable income. Going back to our sample, let's say the client had a profit of $10,000. With a $10,000 profit and $12,000 expense, there is an excess loss of $2,000. This won't create a higher loss for the tax year. Instead, this loss will be carried forward to the next years. However, we should understand that there are limitations in using the Section 179 deduction, which might not impact small business owners because the limit is high, which is $1,250,000. If the business purchases multiple business equipment, the total must not go over $3,130,000. As long as the purchases do not go over these limitations, we won't need to worry about the deductions. So we can use the following calculation to guide us on how to identify the Section 179 expenses and the amount to depreciate. So let us have three scenarios for better understanding. For scenario one, let's say the client has purchased an equipment worth $1 million. The $1 million is both below the annual dollar limitation and reduction in limitation. So the entire 1 million qualify for 179 deduction and there is nothing left to depreciate. For next scenario, the client has purchased an equipment worth $2 million. The amount is higher than the annual dollar limitation, but lower than the reduction in limitation. And since we know that the Section 179 would be the total $1,250,000, we only need to calculate the remaining amount to be depreciated. So using the calculation on the left side, we now have a guide to calculate the amount to be depreciated. So the total cost for the 179 items would be $2 million, and the allowed Section 179 deduction would be $1,250,000. So the remaining amount to be depreciated is $750,000. For our last scenario, the equipment purchased cost $4 million, which is above both the annual dollar limitation and reduction in limitation. So we need to calculate to identify the Section 179 deduction and the remaining balance to be depreciated. Using the calculation guide on the left side, the total cost for 179 items would be $4 million, and the deduction and limitation is $3,130,000. So the excess amount is $870,000. And this amount is deducted from the annual dollar limitation of $1,250,000 to get the allowed Section 179 amount, which is $380,000. Lastly, this amount will be deducted from the total cost of $4 million to know the remaining amount to be depreciated, which is $3,620,000. And for your information, the Section 179 calculation is reflected in the Form 4562 and the tax returns. And lastly, for the Section 179, there is the 2025 complete phase out, which means that if the total Section 179 items are $4,380,000 and above in the same year, everything has to be depreciated. But good news, we have the bonus depreciation. To avoid capitalizing as much as possible, we can maximize the deductions and depreciations in this order. First, the Section 179 deductions. And when your limits are reached within the Section 179 deduction, we can use the bonus depreciation. And after identifying the amount qualified for the bonus depreciation, the remaining amount will be subject to the regular depreciation. So how does this work? Like Section 179, bonus depreciation has an additional tax incentive allowing businesses to deduct a large portion of the cost that normally has to be capitalized. It is important to know bonus depreciations have more immediate tax savings. And items that can qualify are same as Section 179. Items can be new or they can already be used as long as it is new to you, to your business. And it should be used by the business by more than 50%. Following items can qualify equipment, furnitures, or cars. These items that have depreciation life of 20 years or less, interior improvement, or off-the-shelf computer. The following are not allowed: building expansion, elevators, escalators, structural framework, intangible assets. And there's also another special rules for qualified film, television, and live theatrical production. How the bonus depreciation works. First, the property must be purchased and placed into service between September 27, 2017 to January 1, 2027. The percentage of the remaining amount after the Section 179 deduction can be taken as bonus depreciation, and the remaining percentage will be subject to regular depreciation. So in 2024, it is 60%, 2025, it is 40%, 2026 it is 20%, and for 2027 there's none. But there are talks that the bonus depreciation will be back to 100%, but that is still for an update. To have a clear understanding, let us use this flowchart. Let us say we purchase an equipment worth $2 million. Instead of capitalizing it over 5 years, we will utilize the Section 179 deductions and take the maximum allowed 1,250,179 deduction. And the remaining $750,000 doesn't have to be depreciated because we still have bonus depreciation. To utilize the bonus depreciation, we will take 40%, which is the percentage for the year 2025. Means for this year, we have a bonus depreciation of $300,000, which means that the remaining $450,000 will be used and will be subject to regular depreciation. So to summarize, out of the $2 million purchase cost, $1,550,000 is now deducted, and the remaining $450,000 is subject to regular depreciation. So to guide us to know whether an expense is deductible or depreciable, we can use this flowchart. First, we must ask if the expense is ordinary and necessary for the business. If it is not, then it is not deductible nor depreciable. Next, if it is, then we will ask if the cost exceeded the de minimis safe harbor of 2,500 per item. If it is less than 2,500, then good news, it is an immediate deduction. And if it is not, we must ask if it is a long-term asset with useful life of 1 year. If it is not, then it is also an immediate deduction. Then we must ask if the depreciation life of the asset is 20 years or less. If it is more than that, then we must capitalize it over its depreciation life. If it is less than 20 years, then we can use the Section 179. Before taking the Section 179, we must know if the business has a profit or it has a loss. If the business has a loss, then we can use the bonus depreciation to get some of the cost deducted and capitalize the rest over its depreciation life. If the business has a profit, we must first ask if we were able to utilize the Section 179 for a full deduction. But if it still has a remaining amount, let's use the bonus depreciation to get some of the cost deducted. But if we were able to utilize a Section 179 for a full deduction, then great, you're able to deduct the entire cost. That's it for the deduction and depreciation. Thank you for staying in and listening to the discussion for the Section 179 and bonus depreciation. Once again, this is Jessie and have a great day.